What's up, traders? My name is Layla and welcome back to this week's no-nonsense market recap from Bullish Bear. US equity markets had a choppy ride this week as trade talks with China hit a wall. Investor attention pivoted to the Fed's closely watched rate decision on Wednesday, and the S&P 500 broke its winning streak, closing lower on Tuesday after 6 straight days of gains. On the trade front, President Trump scored a small win with a new EU deal, but tensions with China remain the elephant in the room. A finalized tariff reduction with South Korea helped calm some nerves. Copper futures dropped sharply after refined copper was unexpectedly exempted from a looming 50% tariff. On Wednesday, the Fed held rates steady for the 5th straight meeting. No surprises there, but the market didn't have to wait long for fireworks. By Thursday, President Trump took to Truth Social to torch Fed Chair Jerome Powell, calling him too angry, too stupid, and too political to run the central bank. Personal consumption inched up just 0.1% in June, reflecting cautious spending as wage growth slows and tariff anxiety rises. Core PCE inflation came in as expected, but a slight uptick in planned layoffs is raising eyebrows about a softening labor market. One of the week's more eyebrow-raising headlines, a private sit-down between Trump and JP Morgan CEO Jamie Dimon, former rivals now apparently finding common ground. A source said they discussed the economy, financial regulation, and yes, the Fed. Meanwhile, earnings season kept investors in a mostly good mood. Microsoft soared thanks to a 27% jump in cloud revenue and a massive 39% surge in Azure services. This pushed it into the exclusive 4 trillion club right next to Nvidia. Meta Platforms also impressed, beating Q2 earnings and offering upbeat Q3 guidance. A 9% jump in ad prices supercharged by AI helped juice the numbers. Apple also joined the party this week with a strong Q3 earnings report. The company beat expectations as iPhone sales held steady and services revenue hit an all-time high. Starbucks rose after a solid revenue beat even as same-store sales dropped for the 6th straight quarter. Visa posted strong Q3 results but still saw a slight dip as investors grew more cautious. CVS Health climbed sharply after raising its outlook, and eBay jumped on an optimistic sales forecast despite tariff noise. On the flip side, Qualcomm took a hit despite beating earnings, dragged down by weak handset and auto revenues. Ford edged lower after beating revenue, but flagged a hefty $3 billion tariff impact. Merck also slipped, missing its revenue targets, but tightening its earning guidance on the back of cost savings. Rail stocks got rattled as Union Pacific and Norfolk Southern announced a 320 per share merger, sparking competitive concerns between CSX and Berkshire's BNSF. Elsewhere, Electronic Arts cited macro challenges after net bookings came to light. United Health missed slightly on earnings due to rising care costs, and UPS dropped after missing EPS and holding back 2025 guidance, citing murky economic visibility. In M&A land, Palo Alto Networks slipped on reports of a potential $25 billion acquisition of CyberArk software. This signaled consolidation is still heating up in the cybersecurity world. On the regulatory front, TikTok is once again on the chopping block. US Commerce Secretary Howard Lutnick warned the app could be shut down if China doesn't give the US more control over operations, escalating the digital Cold War. As markets digest it all, investors are walking a fine line between cautious optimism and mounting risks, with trade spats, inflation, and regulation all in play. The Fed's next moves could tip the scale as we enter the back half of 2025. For more updates, tune in next week as we continue to track the market's every move, and subscribe down below to Bullish Bear for more videos. Until next time, manage your risk, stay disciplined, and remember, bears make money, bulls make money, but pigs get slaughtered. See you in the trading room.